I'm covering 5 stocks that are set to explode in March going into April. And these stocks are not only going to rise, but I also believe they're trading for some bargain value prices. I respect your time. Let's not waste any of it. Let's cover the 5 stocks in this video and going over some technical analysis, giving you all my research, and actually showing you the optimal entry as well. Let's get started with the first stock, Walmart. So here's my position on Walmart. I have 8,500 shares. It actually makes up a massive amount of my portfolio. It's about $750,000. I'm up about 34% on the stock, and I have several different option positions with a covered call and a sell put. Now, I want to go over why I like Walmart so much because I honestly think this is one of the top stocks to buy. And although it's not the sexy Mag 7 stock, if you're actually looking to make money, 90% of US residents actually live within a 10-mile radius of a Walmart store. So Walmart is like Amazon, but also has physical stores. This is a company, in my opinion, is a must own. Walmart remains one of the strongest and most resilient companies in the world with a massive retail footprint, a dominant grocery business, which, by the way, is the reason Walmart is dominating versus something like Target, which I also like as a company. But grocery store is the SoFi model. The SoFi model, which I talked about many times, is bring customers in the door, upsell them later. Walmart does the same thing. Their dominant grocery store business is exactly why they are growing, as well as their growing presence in e-commerce, which obviously has higher margins. And margins just means that how much the company makes, more of that goes down to the bottom line, and the bottom line is exactly what investors are looking at. So this is a really important stock for you to understand. So I'm very bullish on Walmart, and this is a stock that I'm buying right now going into April, which is not only a growth stock, but it's also a fantastic value stock. Despite concerns about falling behind to Amazon in 2010s and being destroyed, they actually got their act together, and the business has completely taken advantage of the vast store network, and they created a seamless in-store experience and online experience. Walmart is one of my top holdings because they invested heavily in automation, AI-driven logistics, and private label brands to increase efficiency and profitability. AI is a really big component of Walmart, and they're taking advantage of the AI boom right now. Walmart is a high growth company and it trades for a very good value. Walmart has also aggressively integrated AI and automation into its operations, slashing labor costs and increasing efficiency. And based on my notes, its symbiotic power distribution center uses AI driven robots to cut warehouse processing time by 80%, giving Walmart a supply chain advantage over competitors. And these systems improve margins, they reduce waste, and they enhance in-stock availability, which is very important. When customers come into a store, they want to get their products and they don't want to see a store shelf empty. So this is really critical during supply chain disruptions. Walmart is recession-proof. So right now, in the volatility and the choppy markets that we're seeing, it doesn't really matter for Walmart in the long term. This stock has pulled back, and I'll be honest with you, if I look at the technical analysis, it was a little bit rough. However, this is a really fantastic opportunity. And I'm telling you right now, would you rather buy stocks that are at 52-week highs, that are trading very expensive, that have lots of volatility, or would you rather have some high growth companies that are trading at a very good value? Because Walmart went from $105 down to under 85, which is a pretty significant move. And my portfolio has been hit a little bit by Walmart, Palantir, Tesla, but guys, I'm holding. I'm a long-term bull. I'm a perma bull. That's what my education taught me back in college. That's what basically everyone I worked with told me on in the workforce. So I'm very bullish long-term, and being a bear short-term can work out only with hedging, but I would never make a full bearish position in my portfolio and turn the whole portfolio into bear mode. No. Right now, there's a lot of opportunities in the market. So it's actually the opposite. When the market comes down, there's opportunities and stocks become less risky, not more risky. So right now you can see that Walmart is coming back from the 85 level back up to $90 per share. Now, last thing I want to say about Walmart before I move over into the second stock, and this has a lot to do with the Mag 7 and other businesses like Google and Amazon and Meta, is actually Walmart has a really huge advertising business. And this is a hidden gem. Like, a lot of people don't even know that Walmart has a hidden gold mine. And this is Walmart Connect, its retail media network. And it's pretty much become a multi-billion-dollar business rivaling Amazon's ad division. The company now monetizes its massive customer data, offering brands targeted advertising within its ecosystem. So guys, unfortunately, the data that we have is never safe. Wherever you give your information, it's always made into some money, right? So now Walmart is kind of selling data and going into advertising, which makes a lot of sense. They know so many people. Why wouldn't they make more money? Everyone wants to make more money. Businesses, people. And this is a very smart move from them. So I'm not sure I've been excited or so excited about a company that's outside of the big tech companies, but you can say that, Walmart's essentially becoming the big tech company in many ways, which is such a smart move. And I'm very hyped about the advertising business that they have. Not to mention, I said I would wrap up here, but it's a huge position in my portfolio because it has so many things going for it. Advertising is one that I just mentioned, and I promised last one now is healthcare. I just need you to understand the whole foundation of why I invested $750,000 into the business, which is a lot of money. So Walmart Health has expanded into primary care, telehealth, and even prescription drug pricing wars through its $4 generic drug program and Medicare Advantage partnerships. So by leveraging its physical footprint, Walmart is positioning itself as a low-cost healthcare provider, a $4 trillion industry where it can gain significant market share. So this is a growth company, guys. This is a misunderstood growth company in many ways. Walmart is a defensive stock that wins in any economy. Walmart's a growth stock that is gonna, continue to automate AI and healthcare. So this is a stock that YouTubers aren't talking about. I wonder why everyone only talks about a couple of stocks on YouTube, but I'm telling you, this is a unique opportunity. And I'll wrap it up with 57% of Walmart's US sales is coming from grocery stores. So I don't know where they got all these good ideas from, but they have the best ideas in all of the world for monetizing and making money off of all the traffic that they get. So let's go to the next stock, which is going to be NEO. Haven't covered NEO for a long time. I was a long-term investor in NEO, and then basically I bought it for $4 and then I sold it off in the $20 range. I haven't really touched NEO since, and it's been well over a year. I haven't really liked China. However, I want to say that NEO, they're actually doing some good things right now. And I think China is looking very strong, especially as a superpower right now in the world. And NEO specifically, they're a premium Chinese EV maker known for their high performance electric vehicles, battery swapping technology, and autonomous driving innovations, making it a really strong competitor to Tesla in China and in Europe. Here's the chart on NEO. The stock is up over $5 per share. It's actually up 5% in after hours trading. And this stock is becoming very attractive. And once again, I'm starting to gain some conviction in China and the China EV story here. So the stock has had a big move from 420 to over 520. So this is over a 25% move in just the past few weeks. And what I'm looking at is their battery as a service model, which lowers the cost for consumers and provides a unique advantage with 2,000, guys, that's crazy, 2,000 plus swap stations, ensuring faster refueling than traditional charging. So, people have to go charge their Tesla. It does take some time. NEO, they just swap out the battery, come in, swap one battery for the other, and then boom, you can go on your way and you have a full charged battery. So this is a really interesting business model, which is very innovative. And specifically what I like is that obviously China wants to support their homegrown EV players. Like, why would China support, Tesla? Why, right? Why would they make US richer? Obviously, whenever a country can support its own homegrown economy, it's going to do so. That's actually what makes me pretty bullish on NEO and slightly a little bit less bullish on Tesla in terms of what's going on with the US and China relationship right now. With China's EV market booming, government support, and ongoing European expansion, NEO is a very attractive long-term investment. And I plan to put some money to work here. Not a whole lot, maybe 1% of my portfolio, and I will be playing options on NEO. As always, if you want all my live trades, you can always become a member of my Discord community and see my research and my live trades on Mondays and Wednesdays. Now look, with Trump's new tariffs on the Chinese imports, many US companies are relying on Chinese manufacturing and they're seeing higher costs. But NEO, a China-based TV company, benefits from this situation in several key ways, which is very, I would say urgent at this time in terms of an investment vehicle. So the first one is that China's EV market is booming domestically. So while US tariffs hurt Chinese exports, they don't really affect China's domestic EV market, which remains one of the fastest growing in the entire world. And obviously they have a lot of people and they do have some spending power. China is becoming very rich. Their technology is very good as well. Like, I watch a lot of TikTok videos on China and it is pretty wild what's going on there. Like, I really want to go visit. I probably plan to at some point in the near future. Now, the government subsidies and incentives continue to drive massive demand for homegrown brands like Neo, giving it a really strong market base. Now, the second thing is limited US exposure. Now, why would you want to limit US exposure? Well, you kind of see what's going on in the US, right? And it's been kind of a lot of issues in the US culturally, financially for a few decades now. And things are a little rough there. So I do want to diversify. And there are other countries that make tons of money. I know as Americans, sometimes we get into the mindset of, well, America's the only place in the world to be. It's the best country in the world. Well, it is. I mean, I think America is fantastic, but there's also pros and cons. And there is a lot of other countries that are also making lots of money. And there's places that have advantages over US, whether it's on the healthcare side or the economic side, or freedom, or having a better passport, or having better education. I mean, there's a lot of issues. And I'm looking to invest overseas. Why not? You should be diversified. I mean, as an American myself, it's good to diversify. I have all my money in dollars. I mean, it's good to have some diversification. And you guys know I'm not a Bitcoin or crypto investor at all. So looking at China, I want to have exposure. And Neo, unlike Tesla, does depend on China for both production and sales. So that's a good exposure into China right now. And I would say with the conflicts, it's a very smart investment. Also, the third thing is European expansion offers a hedge as well. So it's not just China I'm pretty bullish on. Europe, which is also in a kind of is in a very tough situation right now if the United States, partners with Russia and says, "Hey, Europe, we're kind of done with you. We're done supporting you with our military, and you've been taking advantage of us." I think that Europe may be in a really tough spot. But politics aside, I'm not a politician. I don't know too much on the politics side. What I'm trying to get at is diversification. Okay, you have some American investments, we have some China exposure in Europe as well. We want to benefit from European money. So Neo has been aggressively expanding into Germany, Netherlands, Norway, where demand for premium EVs is very strong, and it provides a revenue stream independent of US trade policies. I talked a little bit about battery swapping is a game changer, but Neo's battery swapping technology truly does give it a unique advantage over Tesla in China, with over 2,000 swapping stations allowing users to replace batteries in just minutes rather than waiting for a charge, making it more attractive to some consumers, right? Some people are just going to be like wowed by that. And I do think that it's very innovative. Now, not to mention the fifth thing about Neo is the cheaper production costs versus US automakers. So while Ford and GM face rising costs due to tariffs, Neo benefits from China's lower production costs and domestic supply chain, making its vehicles more price competitive. And pricing is incredibly important for vehicles. I mean, $1,000, $2,000 difference in a vehicle can make the difference if someone will buy it or not. I mean, a $28,000 vehicle and a $31,000 vehicle, very well, someone could say, hey, that's over 10% difference. I'm going to go with the $28,000 vehicle. All right, let's move over into the next stock, which is going to be Robinhood. So I have a Robinhood position right now, and there's actually a lot of important data that I have on Robinhood. So first of all, I don't have shares of Robinhood at the moment. I have sold puts, which are a very high delta, and I will be getting assigned in the next couple of days here. And wow, actually Robinhood has been recovering super fast. This stock on the 1 week chart, wow, 16%. So I've been telling my community on Discord, I've been saying, guys, Robinhood actually benefits from volatility in the market, because more trading activity means that Robinhood is actually collecting more fees. Let's go over my structured research and take it step by step on Robinhood. I'll give you the full story here. So first of all, the business is Robinhood is a commission-free trading platform that democratizes investing for retail investors and traders, offering stocks, options, crypto, and cash management services. The opportunity that I personally see is that with millennials and Gen Z increasingly investing, Robinhood benefits from a growing user base that prefers mobile first. You're probably watching my video right now on mobile. I would say about 79%, I have data on YouTube, and YouTube is a very interesting platform. Very interesting. 79% of you guys are watching this YouTube video on mobile. And this is very interesting because a lot of us are preferring mobile. So rather than getting on Schwab or Fidelity, and it's a whole archaic system, Robinhood has really innovated, and it's one of the easiest platforms to use. Like, I'm not sponsored by it. People think I'm sponsored by Robinhood. No, it's just a really easy platform to use. Like even a caveman can do it. So in terms of their mobile first approach, I think that's a genius way to go because that's where the trend's going. And their platform is free. Free. I'll talk about this. It's not really free. There's nothing really free in life. So I'll talk about how they make money. But look, to wrap up the opportunity here, they're expanding their product suite, including retirement accounts, high yield cash management, and potential international expansion, which really positions Robinhood for long-term growth. I can't say how much more bullish I am on a investment platform. And the CEO, Vladimir, he's really good. I mean, this guy is like Pavel Durov, very smart guy. I mean, a lot of these Russian guys and from Soviet Union, they're very good at mathematics, problem solving. A lot of the top chess players. So looking at the management, it's good management. It's a good CEO, and I'm very bullish on Robinhood long term. So in terms of the competitive advantage, unlike traditional brokers, Robinhood thrives on simplicity, zero commissions, zero commissions. Hold on a second, I'll explain this in a moment how they actually make money. Because zero commissions, it is kind of zero commissions, but it's like a free date. You know, you're gonna get swindled somehow. And seamless user experience, making it the go-to platform for the first-time investor. Now, look, my urgent reason to buy this stock right now, and it's up 16%. I mean, I think pretty clear here on why this stock is good. I mentioned this last week in my Discord community. I've been trading it. I've been trading it a little bit by selling options and selling put options, which is a good way to get into a stock because Robinhood was trading for over $65 per share. So this stock really pulled back, and now I think is a good time. It's a really good time, especially as interest rates potentially decline in 2025. Trading volumes and margin lending are likely to surge, boosting Robinhood's revenue from payment for order flow, interest income, and premium services. Now, what is order flow? All right, we'll talk about that in just a moment, but I want to say the other important factors to look at is Robinhood's growing crypto offering, improved regulatory compliance, and increased monetization per user, indicating it's maturing beyond its initial meme stock fueled hype, making it a more sustainable investment. So monetization per user, again, guys, going back to the SoFi model, you come into Robinhood, you become a user. You start trading for free. Talk about the commission stuff in a second because it's a little tricky there. But you come in and then you get upsold, right? You go into the retirement, you go into the cash management, you go into other products. So just like every business, you come in to the ecosystem and then you get upsold. So when you place a trade on Robinhood or another broker, by the way, instead of executing it directly to an exchange like the New York Stock Exchange or the NASDAQ, here's how they actually make money. They actually take the order flow from you and they sell it to a market maker. Now, these market makers, they execute trades and profit from very tiny differences between bid and ask spreads. Where I actually used to work is a company called Group 1 Trading. Group 1 Trading, they're in New York City and on Wall Street where I work, and then they have their actual headquarters is in Chicago, the Chicago Boards of Exchange over there. But essentially, what they do is a market maker, they provide liquidity for the market. So when you're option trading, you're trying to buy, you're trying to sell, well, there might not be a buyer or seller. So instead, there's a market maker who provides liquidity. So when we go to the bid and ask, the reason why the bid and ask is there is because there's bidders, people trying to purchase, and there's askers who are trying to sell. And the market maker steps in and then they try to create some liquidity and they create that volume and they facilitate the process and they get paid for that, right? So Robinhood takes a look at the order flow, or they are taking the order flow essentially, and they sell it over to a market maker who gets a better price. So although it's free to trade, like you execute an option for let's say $1.25. Well, maybe it was only worth $1.23, but they upsold you on $1.25. Now you can't see that, right? But the bid and ask, as you trade every time, you might lose a couple of dollars in efficiency or liquidity costs. So this is exactly what it is. And the market maker, might make $2. And Robinhood sold him the order flow. And Robinhood will charge him a percentage of that. So Robinhood makes money by selling your trades and my trades as well, and the trade orders that we put in to these market makers who pay a small fee for the right to execute them. This process is called payment for order flow, or PFOF, and this allows Robinhood to offer commission-free trading while still making money. So it's not really commission-free. Oh my goodness, shocking, right? Another platform person or business online that wants to make money. Wow, how surprising. Well, that's fine. This business is providing so much value to people that we are voluntarily choosing to use the platform because it's easy to use, it's the best platform, and although it's not fully free, other brokerages are also not free. They charge usually 65 cents a contract. So I'm on Schwab as well, and they charge 65 cents a contract. So it's not really a big deal. And I'm not calling out Robinhood by no means. I mean, this is fine. That's their business model, and consumers are happy with it. So market makers, by the way, they benefit from capturing a small fraction of a few pennies. So sometimes they'll make very little, but on a large scale, they collect a lot of money. And Robinhood also makes a lot of money. And Robinhood's business model thrives on high trading activity. So this kind of market choppiness and this correction, we are in a correction. We've pulled back over 10%. This is good for Robinhood business. So Robinhood went down a lot, but this is good because more people trading, more people being concerned about the market is actually more trading fees, and Robinhood's making more money, and they're selling options and buying options, and this is fantastic for their business, as well as crypto. Crypto is also very volatile. So yeah, I love Robinhood, and I like their business model. Their business model is kind of like that free approach, but again, if something's free, likely you are the product. So I have data that makes me believe Robinhood is raking in money from trading volume, being on the higher end, right? If you look at the volume, it's definitely on the higher end, as well as I see how active my Discord community is. And, a lot of us are just trading a lot. And I think my little sample size is indicative of the overall pool of people who are trading. So I think the trading volume is high. I can see it's high. I know it's high. So I think Robinhood will have some good earnings. Now let's move into the next stock, which is going to be Tesla. I'm going to try to keep this as short as possible as this video is getting a little bit longer. Tesla has fallen almost 50% from its high, but hedge fund billionaire Ron Barron still thinks the company is worth $5 trillion within the next decade, which is a lot of room for upside. Now, why do I think Tesla is good right now? Well, there's a couple of reasons. Let's go into the Tesla chart. By the way, before I move on, Robinhood's recovering really fast, so I had this chart pulled up, but forgot to show it. But it's recovering fast, and I think it's gonna head back up to $50 per share. Now, let's put up Tesla on the chart, and I'm going to show you the technicals on Tesla. Tesla, lots of volatility, and I have gotten out of Tesla at 290. I told my Discord community we're going to take it easy on Tesla. A lot of people were a bit upset at that, but I'm just saying the truth. 290, I'm like, we got to get out. We got to protect what we made. We bought Tesla in the low 200s, 290. It was a good exit point. But now with Tesla coming back down, I mean, I think you'd have to be silly not to buy this stock. I think Tesla has a good long-term story, right? Despite me selling it and going a little bit short-term bearish on it, which ended up being a fantastic trade, I can't be out of Tesla in the long term because Tesla is still a good story and a good stock to invest in. And right now, 238, we're not at the bottom of the Bollinger Band, but 222 is the bottom of the Bollinger Band. So I would be selling put options into 220 strike price for sure to collect a lot of income. The implied volatility is wild on Tesla. And I think right now is a great opportunity as well because the Cybertruck is finally scaling production. And with its high average selling price and strong pre-order demand, it could significantly boost Tesla's profitability in 2025. And I saw actually someone imported a Cybertruck into Moldova, where I'm at right now, working on some documents here because I want to have more freedom and more passport. I have Soviet roots in Moldova specifically. But anyways, not to talk about myself too much, Tesla is gaining a lot of attention, even in countries that are like Moldova. It's between Romania and Ukraine, and very few people know about it. But Tesla is so popular, it's worldwide, everywhere. And the more Tesla is adopted, I think you'll see that other people will buy it. And that's the free marketing and the free attention that Tesla gets. And free marketing is the most powerful thing ever. It's the best thing. In fact, what I like to invest in is a company with good marketing because it's not good products that make all the money. It's good marketing and it's good sales. And Tesla has this formula down very well. So when I weigh both the tough environment Tesla is currently operating in and the promising catalysts on the horizon with the Cybertruck, Elon Musk is a little bit off topic right now with his politics, but inevitably, I think he's going to come back and focus on Tesla. Tesla under 250 is a fantastic price to pay for Tesla long term, and I think this company has a very good future. Right now, in the short term, it might be choppy, but that's where the opportunity is. Markets are choppy, and volatility is an opportunity. If markets weren't volatile, there would be no opportunity. So it's as simple as that. All right, let's go into the next stock, which is Nike, the last stock I have, and I have 1,200 shares of Nike, $88,000 position. I have some covered calls, which are making some money. Then I've actually been doing a lot of covered calls on Nike. Nike has had some problems, and the company acknowledged that becoming far too promotional was a really big mistake. They were offering excessive discounts that not only impacted its brand image, but also disrupted overall market profitability. This strategy led to a devaluation of the brand's perceived exclusivity and worth. And this is very bad. When a company starts to do sale after sale and buy this for $10 and 50% off, It's not good. That's why I myself, I focus a lot on one-on-one coaching, and I stopped doing these little $50 a month discords because I want to commit myself to one person and help them really scale. And that's also what I've been doing myself in my coaching practice is I work one-on-one and I charge fairly for the time, and I actually invest real time into helping people. And I think this is across the board for all companies. Companies need to maintain their reputation and their brand. Nike, very, very important because their brand is everything. I mean, a Nike shoe is it's a commodity. It's a commodity. It's crazy, right? It's just a shoe. Adidas has shoes. Uniqlo has shoes. There's 100 companies that have shoes. But what makes Nike unique is their brand. I think the CEO, Elliot Hill, he rejoined Nike as president and chief executive officer. And I'm really excited about that because he aims to improve Nike by refocusing on its core sports category, like running and basketball. Obviously, Serena Williams is sponsored by Nike. There's WNBA is sponsored by Nike. Nike is doing a fantastic job in picking the correct athletes to display what Nike is all about. Okay, and running and basketball is a strengthening part of their business because they had really good relationships and then they kind of started to go off into a different strategy when COVID started. But right now, I think Nike's really getting their act together. And, I'm actually underwater a little bit, 1% on the stock. I think this is one of the safest stocks to buy right now. I mean, if you look at a high growth company, which Nike's high growth still, I think they have a good marketing plan, as well as a good value. I mean, this stock is trading for very good value. Look at the 1 year chart. This stock went down 25%. So talking about value and growth, Nike is a really good choice. If you guys liked my overview of these 5 stocks, make sure to subscribe so I know to make more unique videos like this. I covered 5 unique stocks. Well, Tesla was not as unique, but the other 4 were very unique and new. I spent a lot of time on this research, and I hope that you really enjoyed this video. If you're interested in coaching, you can check out the first link in the description, and you can see all of my research and all of the trades that I make live. Alrighty, let's make some money right here. Don't worry about the choppy market. We're going to recover. It's pretty much part of the game. I'm very confident in the bull market in 2025. Although we're going to see some more volatility, there's also lots of opportunities. So make sure to take advantage of it. And I hope that you have a safe, blessed, and happy week.